There we go. Good morning, good afternoon, and good evening, guys. If you're watching this video right now, my name is Tony Martinez. I'm going to get right into it. Not going to waste too much time. I've got a good group of people that are here right now, ready to train and ready to learn. Guys, I want you guys to know just because we're recording this does not mean that, here we go, does not mean that you guys don't have the ability to unmute yourself and ask a question. Ask a question, ask away if you have it. Let me put it to speaker view. Let me change it like this. There we go. Okay. So let's talk about disability insurance. Okay. Let me ask one quick question. Has anybody here ever sold a disability insurance policy, otherwise known as DI insurance? If you have, unmute yourself and just say, hey, I have, and then give me your name. I'm going to guess that not a single person here has. I'm going to take that guess. All right. Okay. So let's talk disability insurance. What exactly is disability insurance? Disability insurance is a replacement of your income, a percentage of your income in the event that you're not able to perform your occupation. That's what disability insurance is. Okay. Now, you also need, just so you know, in order to sell disability insurance, you need a life and health license. This is not just having the life only license. So any of my former Primerica guys that have just the 214 license, 214 is the code for Florida. I don't know what the code is for other states. That license would require you to add on another license to get the health portion of it. Let me ask a question here to the group. How many of you guys are health licensed? You have life and health, either two separate ones or you did the test that had it all collectively together. Okay. I see a couple of you guys there. Okay, good. So there's a good amount of you guys, right? So let's capitalize now then. What the heck is disability insurance? Number one, I want you to understand it's a whole different type of underwriting. They're not looking at you and saying, what's your mortality? What's the probability of this person passing away prematurely? That's not what this is. They're looking at it and they're saying, what's the probability of this person becoming disabled and unable to perform their job? So the type of job has a lot to do with the rating, right? Like, for example, a construction worker is going to get, a completely different type of price point, different type of risk analysis done than a receptionist, right? Because there's a higher probability that a construction worker could get injured and lose their ability to perform their job. But a receptionist could break her leg over the weekend. She could still he or she could still wheel her chair himself in and still do the job, right? Now, why is it not talked about as much? Why in the world is disability insurance not talked about as much? Let me ask you guys a question. What are the two things in this life you cannot avoid? Two things. What are they?
Death and taxes.
That's right. You can't avoid death. You can't avoid taxes. People are more prone to getting life insurance because they know at some point or another they're not going to be here. They're not, right? Disability, however, something that might happen to you might not happen to you. So a lot of people kind of put that on the back burner because they say to themselves, it'll never be me until it's them. Okay? Now, with that in mind, that means the following. You've got to get very good if you're going to present this. Before you present the product, you got to get very good at figuring out what their level of priority is to disability insurance. You got to figure that piece out. One of the questions that I ask all the time, I don't care if I'm recruiting you, selling you life insurance, and selling you an annuity, selling you disability. One of the questions that I always ask, you guys have heard me say time and time again, is listen, on a scale of 1 to 10, 1, not interested at all, this was the worst thing ever, or 10, I'm super interested, where do I sign? Where do you see yourself? Where do you see yourself? 1 to 10, where do you see yourself? Anybody that gives me an 8 or above, I know there's high interest. But if you start giving me 4s and 5s, you start giving me 6s, I know that the level of interest isn't there. And if the level of interest isn't there on a disability case, don't try to sell a very expensive disability case. I'm not telling you not to present it. I'm saying present a cost-effective solution. Because for 10, 15 bucks, for 20 bucks a month, they might just take it anyways. Because to them, 15, 20 bucks isn't much. Right? So that's kind of how I measure it, right? Now, let's dig deeper now into disability insurance. Okay? Remember what it is. It's the replacement of your income if you're unable to perform your job. Okay? If you're unable to perform your job. So, there's two types. Okay? Now, granted, I'm gonna give this disclosure. Every company has their own variation. So I'm giving you more like a 50-foot bird's eye view of what the majority of companies have. There might be one little company, anomaly company that has a different type of product, but the majority have these two right here. There's a 5-year plan, and then there's a lifetime plan. Now, lifetime doesn't mean if you become disabled, you're gonna get a paycheck every single month for the rest of your life. No, you're gonna get it until 65. Lifetime plans mean you're gonna get coverage from now until 65. Why 65? Because at 65, you get Social Security. And at 65, you should be traditionally retired. So most disability policies will only go until 65 if it's a lifetime plan, or you sign up for a 5-year plan. Now you might say, well, 5 years, holy crap. Like if the person is young, what's the probability of them getting it? Because the probability of them becoming disabled is really low. It's not 5 years from when they sign up. Like right now we're sitting on June 2021. It doesn't mean if somebody buys it today, they're going to be covered from June 2021 to June 2026. It's not 5 years like the clock starts when they sign up. No, there's 5 years worth of income that the insurance company is willing to replace. The client makes monthly payments. That 5-year clock doesn't start until the disability begins. So maybe the person pays into the policy for 3-4 years, and then on the 4th year they become disabled. The 5-year clock begins then. And if they only use 2 years worth of the income, then they still have 3 years remaining for a different type of disability later in the future. Does that make sense? Yes, yes, yes. Okay, good, cool. Right, so those are the two types. What are the things that an underwriter wants to look at? Okay, and here's why it's important you know this is because you need to ask for this information. You need to ask for this information. They want to know specifically what occupation. What does a person do? How long have they been doing it? What does a person do? How long have they been doing it? And how many hours are they doing it? Because yes, disability insurance will approve you, rate you, or decline you if it's, you know, a part-time deal versus a full-time deal. What type of job do they do specifically? How long have they been doing it? How many hours they're putting in on a weekly basis? And what their income is. Now, income. Let's talk about income for a minute. It's verifiable income. So if you're dealing with someone that gets a W-2, it's simple. What's your, give me your pay stub, right? I need a copy of your pay stub. If it's not that and they're a business owner, depending on how much disability insurance they're looking for, number one, they might need tax returns. Now, if people need tax returns, it's not the gross income, the gross earnings. It's not that. It's not the gross earnings, okay? It's the adjusted gross. It's after the business expenses. It's after the business expenses. Okay, that's what disability insurance is. Now, there is a business owner's disability insurance plan that replaces some of the business expenses that the client would have whether the business was open or not if they became disabled. But I'm not here to talk about that one today. That's a whole different animal when you talk about small business DI. That's not what I'm talking about. I'm talking about traditional disability insurance for the consumer, right? So if you deal with, for example, a realtor, they just like us, right? They get a 1099. They might make 150,000, but after their business expenses that they report, their gas, their meals, their cell phone, their car expenses, their travel expenses, all that stuff, their office expenses, after the 150, they're only reporting 40,000 net remaining, you can only get them disability insurance for the 40 grand. You can't get it for the 150. So it's all about what's reporting on their taxes as adjusted gross income after business expenses. Let me pause for a minute here. Does anybody have any questions about that thus far? Everybody's good? Okay. All right, good. So we know there's 5-year plans. We know there's we're calling paid to 65 plans, right? We know what insurance companies are looking for to get you approved. Let me ask a question. Who do you think gets underwritten heavier on the disability side, a man or a woman?
A man.
Man.
Okay, anybody else? You're wrong. It's a woman. It's a woman. You know why? Women bear children. The process of pregnancy could put somebody in a position where they become disabled. Right? You ever heard stories of women, the baby's weighing on their sciatic nerve and they can't move, they can't this, they got to get bedridden or whatever. And that's I'm talking about 3, 4, 5 months worth of being bedridden, that kind of stuff. Like that kind of stuff alone right there puts people in that type of position where they become disabled. So women get underwritten a lot heavier. Life insurance, men get underwritten a lot heavier. So the cost of insurance for life insurance for women is cheaper than for men, but for men, disability insurance is cheaper for them than for women because women bear children. And statistically, apparently, right? I'm not throwing jabs, but statistically, right? It seems like women claim more disabilities issues than men, which could, I mean, just think about it. A lot of guys have egos, right? I'm good, I'm okay, I'm gonna keep working, right? A woman might be like, no, I'm disabled. Pay me, insurance company. I'll be home chilling, right? But nonetheless,
that's because men have a higher pain threshold than women.
There you go. I'm not even gonna jump into that one. I think got a higher pain threshold than men. They be bearing children, man. I'm blessed every day. I wake up every day. Thank God that I'm a man, not a woman. My goodness. But anyhow, yes, you need to know that. You need to know that aspect. In life insurance, if someone broke their foot, someone broke their knee, those kinds of things they don't care from an underwriting standpoint, but they do care in a disability plan. And a disability plan has a higher chance of getting what's called exclusions. Exclusion is this: let's say somebody had a back injury 4 years ago, right? And they're applying for disability insurance. Disability insurance might approve them and they'll say, hey, we're going to approve you, but we're excluding anything that has to do with your lower back. Anything at all that has to do with your lower back, we're not going to give you disability insurance because that's a pre-existing condition. We're not going to cover you. And specifically the amendment, when you get it, the policy, the amendment will say, vertebrae number this, and number this, these vertebrae right here, we're not going to cover. So it's excluded from this disability coverage, right? That kind of stuff is more common in disability income, right? Remember what disability income does, it replaces your income. Are you going to get a big lump sum like life insurance, living benefit? No. You're gonna get a monthly stream of income, The stream of income should be roughly about 85% of your net income. 85% of your net income is roughly kind of the formulas that most employers go for, right? So if you come across people that say, I have disability through my employer, okay, great, let's talk about it. Couple things you need to know. If the premium payments are being paid for by the client, by the employer, if the premium payments are being paid for by the employer, the benefits are taxable. Most employer plans only cover 60% of your income. So let's use round numbers. Let's say $100,000 salary. 60% of your income, that means what? That means 60,000 is covered. But if the employer is the one making the premium payments, then what? What does that mean? That means that the person's only probably keeping, let's take out, 15% out of the 60, they're probably only keeping $51,000. Does that make sense? You see how somebody went from, man, I make 100 grand, I have disability insurance through my employer, but after you take away taxes and after you take away the most that they're willing to cover, the person's only really going to get about half of that. That's the conversation that I have with clients. Now, Mr. Klein, are you aware that I could cover up to 85% and you're only covering 50% right now? Oh my God, I didn't know that. Mr. Klein, let me ask you a question. Right now, could you afford a 50% pay cut in your income? If all of a sudden next month your employer decided to pay you half what he's paying you, could you survive? No, there's no way I could. And you don't have any new added medical bills either because you're not disabled. So imagine if you became disabled and now had to live off of only 50% of your income because your current disability policy only covers 60% of your income. And that 60% is taxable, which means you're only really taking home about 50% of your income. Did you see how I just kind of processed that issue with the client? You see how I create a scenario Mr. Client, right now, if you woke up and next month the employer decided they're only going to give you half of your salary, nothing's wrong with you. They're going through pay cuts. Could you survive? Heck no, I could not. I'm living paycheck to paycheck. Well, right now, I just want you to understand, without the added costs of whatever medical bills you would have if you became disabled, your employer is only replacing 50% of your income if you became disabled. Did you know that? No, I didn't. Yes, that's how the plan works. So you have a shortage. Do you know that legally I could protect about 85% of your income? I'm not telling you that losing 15% of your income isn't going to be tough, but it's a heck of a lot easier than losing 50% of your income. Wouldn't you agree? Yes, I would. Okay. So, Mr. Client, on a scale of 1 to 10, 1 not interested, Tony, stop wasting my time, or 10, I'm very interested. What's your level of interest in learning how to fill that gap? If I can help you fill that gap in turn and get you back up to that 85% threshold, what's your level of interest in something like that? Well, I'm very interested. I need to do that. I need to do that. I need to protect that. Yeah, there you go. Now you're in for a disability case. Can you sell somebody their own personal disability insurance policy? Their own personal disability insurance policy if they have insurance with their employer already? Yes, you can. You can. You just need to know how much that plan is covering. You just need to know how much that plan is covering so that you could cover the shortage. That's really what it comes down to. You need to understand, they need to understand that if the premium payments are being paid for by the employer, then the benefit is taxable. So for small business owners, when they say, can I write this off? You can, but if you write this off, all the benefits are taxable. I don't know if you want that. Because Uncle Sam's going to tax you somewhere on insurance. He either taxes you on the premiums or taxes on the benefit. Think about life insurance. Life insurance is tax-free on the benefit only because the premium payments are taxable. That's coming from your paycheck. You're not deducting that. Same thing with disability insurance. Same thing. Now, if you come across someone who has a DI policy, you want to ask them for a copy of it and see if you can find leaks. You want to know where the biggest leak is? The definition of a disability. The definition of a disability. So let me break this down for you guys. This is a part you want to take some notes on. When you look at the definition of a disability, you want to make sure that it is an ONOC versus an ENEOC. I'll explain what that is. ONOC, ENEOC. Most group benefit plans will say, if you're not able to perform the jobs, duties, and tasks of any occupation, you will be declared disabled. Any occupation, any occupation. Holy crap, any occupation? But wait a minute, the kind of work that I do is a specialty. You know, I'm a surgeon. Man, I use my hands. I mean, what if I develop a tremor? I can't do surgery. I can still do consultations. I can still be a general practitioner. Oh, then you're not disabled. Wait, well, hold up, wait though. But a general practitioner gets paid half what I do. Yeah, but you're not disabled because you can still perform any occupation. You can do anything. I don't like those types of plans. However, I do love ONOC. Means if you are unable to perform the duties, tasks, and responsibilities of your own occupation, you are now declared disabled. So now they look at your profession, your own occupation. What do you do? At what job, at what time of the year, like your job, can you do your job? Who declares you disabled? The doctor. The doctor will declare, hey, you're not able to work. And then the insurance company requests those medical records and then they decide based on that. You're not able to perform your own occupation. Big. That's huge. So whenever you're dealing with people who have disability insurance, they have those policies in place. Okay, let's take a look at it. Let's take a look at it. Let's figure out what you got, what you don't got. Right? Now, I told you guys I was going to be focusing in on just individual DI, but just a little bit on small business DI. Small business DI has nothing to do with replacing your net income. It has everything to do with replacing the business expenses income. And there's a list of things that disability insurance companies count as a business expense that's worth replacing because of a disability, like payroll, right? Like I have people on my team that are on payroll. And if I became disabled and I wasn't able to work, I could get a disability policy, not only to replace my income while I'm not working, but also replace my salaries that I'm paying to my team because I'm unable to work, right? So that part is something that is a tax deduction, okay? But again, I'm not going to dig deeper into that one. I'm going to talk folks solely on the individual DI for the moment, okay? Does anybody have any questions before I go forward? No, everybody's good?
I think I got one, Tony.
Go for it.
Talking about the premiums paying by the employer. What about if this kind of covering it is on a group?
Yeah. Yeah, there's a lot of group policies. Big company that does group DI is a company called Unum, right? I think Protective also does group policies in the DI space, right? We have a couple companies in our platform, One America, One America, Protective. We have all those for group policies. Now, when you set a group policy in place, you're talking with the employers. What does the employer want? The employer wants a tax deduction. That's why the employer typically is willing to make the insurance premium payments, but the employee just needs to know that, yes, this is free for you, but it's taxable for you if you claim it. So there's a shortage you need to fill. Why don't we sit down and have a one-on-one? I love working with the group market, guys, because when you get the employer and you sell the employer the group plans, you then get to have one-on-ones with the individual employees and help them cover whatever shortages the employer's not covering. And that's, you could talk about that with life insurance. You could talk about that with disability insurance. You could talk about that with long-term care insurance. You could talk about that with health insurance. Your employer's paying your health insurance premiums, but these insurance policies have a $5,000 deductible. Let me help you cover that $5,000 deductible. How? Living benefits on a term policy, right? Or a critical illness policy, a standalone critical illness policy through Mutual of Omaha. That's all that they do is they cover that piece. Or a med sub plan, like a medical supplement plan through Mutual of Omaha. I mean, there's, again, when you work with the employer, you get to go work with the employees. How I typically set it up is I tell them, I go, listen, do you have a place where your employees have lunch? Like if it's an office structure, yeah. You know, they go to lunch, Okay, any way you can put me in one office and just make sure, you know, send a memo out to all of your employees to stop by that office on their way to lunch to go pick up their human resources packet. And then what happens is, you're sitting there in a booth, right? And you've got a couple folders with your business card. You've got maybe some flyers of the group benefits that the employer put in place, but you're getting a sign-in sheet. Let everybody sign in, name, phone number, email. And you're having little light conversations with them on the way as they're coming in about what shortages they don't have, what they don't, and that's how I present it. Your employer's covering this, and this, but these areas here, your employer isn't covering, but they're extending you a free financial consultation to be able to get those covered if you wish. Is that of interest to you? Yes, it is. Great. I'll call you later on this evening. Yes, it is. Great. I'll call you later on this evening. No, it's not interested. Okay, not a problem. Have a great day. Bam, you sell the business, you sell the employees. Simple. So I did that with a Marriott Resort Hotel here in Sanibel. I met with the GM. The GM then scheduled a meeting for me to meet with the department managers. And then from there, I met with all the employees inside of the department. I was working that market, guys, for about 3 months inside of that hotel. I probably wrote, oh my God. And I wrote an easy 200,000 premium in those 3 months there. It was easy. Because again, when you get them from the top, it's very easy. You have credibility to work down. Right? And it's always, this is something your employers put in place for you as a benefit. Boom, 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 boom. Yeah. Okay. Now, let me talk to you about the companies within our platform that you can leverage for individual DI. Mutual of Omaha. Mutual of Omaha right now, huge. I'm not going to say that we don't have other companies. We do. I'm going to tell you, Mutual of Omaha has a big platform in the disability space. Now, I keep calling it DI. Technically, it's LTD, long-term disability, which means what? It cannot be a disability that the person's out of commission for a week or two, right? So there's two types of disability policies when it comes to that. There's there's a short-term disability, and then there's an LTD, long-term disability. Short-term disability says the person can't perform their job for a period of 2 weeks. And then boom, they can go on short-term disability. They can collect their income for 90 days off the short-term. If the disability lasts longer than 90 days, then kicks in the long-term disability. So what does that mean? Long-term disability has a 90-day waiting period, and it's called an elimination period. 90 days. So can you fill the gap to that 90 days? You can. You can fill that gap with a short-term disability plan. Short-term disability only needs a 2-week waiting period. Most people, most women in pregnancies will file their short-term disability, but won't get to their long-term disability. Right? So this is a tip for you guys with your clientele. If you have a client, if you got a client who's pregnant, right? To go on maternity leave, right? Most employers will let you take like a 3 to 5 day maternity leave. It's kind of this is a little trick. You ask them, say, hey, do you have short-term disability? You do, okay. Listen, when the baby's born, file it. File your short-term disability. Tell them you have struggle getting up, your sciatic nerve, whatever, you have struggle, whatever it is. You just had a baby, right? And what happens after 2 weeks, your bereavement, your income replacement from the employer for pregnancy might be over, but then your short-term disability kicks in, and you have that for 90 days. And although it's not 100% of your income replaced, it's 50% of your income replaced, if you can handle that. You get what I'm saying? Those are things that people can leverage. You can leverage, right? We can sell it. So let me talk a little bit about the sales tactic behind this, because that's important. We could talk technical all day long about the product, the ins and outs, but if you don't know how to, if you don't know how to story sell it, the facts ain't gonna do nothing. The facts will just tell you about it, but the stories are gonna sell it to you. It's not gonna sell you, right? Number one, that's not a one meeting sale. No, it's not. It's not a one meeting sale. That is I'm coming in for the first meeting to fact find, to learn about you. Then I'm coming in. Then I'm gonna come back in the second meeting, and I'm gonna present solutions. In my fact-finding meeting, I'm doing a dime analysis. I'm talking about term, GUL, IUL. I'm getting a budget. That's my life side. But the DI side, well, what do you do for a living? Right? What's your gross income? What's your income net that you bring home? Tell me about that type of occupation. Tell me how long you've been doing it. Mr. Klein, let me ask you a question right now. If you lost your ability to work, what's your backup plan? Most people say, I have no backup plan. Okay. Mr. Klein, would you agree that your paycheck right now is the most important and biggest asset that you have? Yes, it is. Okay. So, Mr. Klein, on a scale of 1 to 10, how important is it to you that I find a solution to make sure that if you pass away or if you lose your ability to work, I can make sure your family has income coming into the household? Well, it's pretty important to me. Okay. So the DI side, I know how long they've been working there, what their gross income is, what their net income is. I know a little bit specifics about that type of occupation, because it's not just, oh, I work for the county. No, what do you do in the county? Are you a teacher? Are you a janitor? I need to know. Are you a police officer? There's some occupations that we won't cover, just so you know. Most disability companies, they won't cover anything that has you standing on your feet, like a restaurant. Actually, no, the reason they don't cover restaurants is because it's hard to tell what people's income is, because they live on tips so much. That's why, and there's a high turnaround. Police officers, they won't cover that, right? Firefighters, they won't cover that. There's special policies for that. That's not your traditional stuff. Okay. Sometimes if you don't make enough income, sometimes you got to make at least $20,000 to have disability insurance. But get the facts. Ask the questions. Mr. Klein, if you lose your income right now, tomorrow, you're not able to work, what's your backup plan? I don't have a backup plan. Holy crap. Would you agree that that's probably a little bit important to make sure? Yes, it is. Okay. So on a scale of 1 to 10, if I can help you fulfill your needs, from a life insurance side, but also make sure that your paycheck is protected. What scale of 1 to 10? What's your level of interest? I'm very interested. Okay. Now you got something. Now you got something, right? I always, if I'm doing disability, guys, I'm always doing a budget. I'm always doing a budget. I need a P&L. I need to know you got this much net income coming in. What are you using that money to pay? I mean, I want to know what your rent is, what your electric, what your water, I want to know. I want to do that. I want to do that because that's the story. That's the hot button right there. And then I'm going to contact the companies. I'm going to have them run me some quotes. You're going to sell a lot of 5-year plans, more than you will 65 plans. Why? Because they're cost effective. Guys, 5-year plans are like $30, $40. So you present now a life insurance policy that costs the client $75. Because when I come to the table, I'm like, when I go to the closing table, I'm bringing to them packages. This is option A, option B, option C. Right? Option A, you take a term insurance policy by itself, standalone. Here it is, it's $70. Option B, you take a term policy, but we attach a disability policy attached to it. It's an extra $25, $30. So now you're not spending $70, now you're spending $110 a month. Option C, you take on a permanent policy and a disability policy, right? What kind of permanent policy can I do? Well, you can do a GUL, you can do an IUL, but here's this permanent, but here's also the DI. Out of these three, which one of the one makes sense? You know, most people will pick something in the middle. They'll pick something in the middle because they don't want the worst, they don't want the best. Pick something in the middle. Now you might say, well, man, this DI policy only costs $30, $40, $50, but you know, that's $500, $600 of annual premium. If 50% of your clients do that, I mean, I'm personally right now, and I haven't even been on the field nearly as much as I should. It's this whole year has been more back office than anything, really building out this infrastructure, making sure you guys are really going and growing. But I'm writing up 10 to 12 people a month. If I get 50% of them to just do one DI policy at $600, that's an extra $3,000 of annual premium. I mean, it's not bad, y'all. It's good income. And what you're doing now is you're creating a sticky situation with your clients. That's not a bad term. It's a sales term. A sticky situation is this: when you're selling multiple products to the client, that client has a higher likelihood of staying with you, of sticking with you. They stick around longer. That's why they call it a sticky product. They stick around longer. Because if all they have to do is cancel one policy and they end their relationship with you, or they have to cancel 4 or 5 policies, they're more likely to say, you know what? Let me just stay here. That's why State Farm and all states love to sell these bundled packages, because you might be able to find them a cheaper life insurance policy, but because they have their life, their homeowners, their errors and omission, they have their general life, all that stuff there. They're like, I'm not just going to call my State Farm agent and cancel this one policy because this guy's saving me money when I got all these other things. Let me just stay here. That's what you start creating, that type of a relationship with them. And now you're really thinking holistically, Mr. Client, I'm now protecting you if you pass away too soon, or if you become disabled and can't work. And the way DI is going to pay, it's going to pay a monthly income, a paycheck every month, a paycheck every month, a paycheck every month. Again, and it'll replace maximum 85% of their net income. 85% of their net income. Anybody have any questions? Okay.
Hey, Tony.
Yes, ma'am.
Tanisha, I have a quick question.
Yes, ma'am.
So I know that you said that the plan for age 65, of course, that ends at age 65. What about people who are interested in the 5-year plan? Is there an age maximum where a company won't allow you to offer that?
65. They won't go past 65. So if you get the client and they're 62, they've only got 4 years of coverage, and that clock already started. After 65, there's no disability insurances that I know of, guys, and I've been in the game for long. I'm not gonna say that you can't probably find one little itty bitty company that has some type of a discrepancy, but most of them at 65, there's no more coverages in place. No more. One other last piece you want to ask when you're talking to disability insurance companies, you want to ask them if their benefit gets reduced if the client also gets Social Security income. Kobe, stop, please. Sorry, my dog is making noises. So here's what I mean by that. If someone becomes disabled, sometimes they can file for Social Security disability income. Some DI policies will actually reduce how much money you get based on how much you're getting from Social Security disability income. Some policies don't even look at Social Security disability. They say, we committed to giving you X amount of money. It doesn't matter to us if the government is giving you Social Security disability income. We're gonna give it to you as well too. So those are the types of questions you wanna be asking. So homework for you guys is this. If you're really interested in getting in that market, your homework is this. First off, start with Mutual of Omaha, contact their sales. You want to ask them, hey, do you have a 5-year plan? Do you have a plan to 65? One. Question number 2. The definition of a disability for Mutual of Omaha, is it any occupation or is it own occupation? Can you send me a copy of your definition of a disability? Number 2. Number 3, can you send me a list of the occupations that you don't cover so that I know this occupation, this, they do not cover it. Can you send me that? Number 3. Number 4, does your disability insurance get reduced by Social Security disability income or does it not? Right, what is that? They might have both. Cool. Some companies even have an inflation rider you can attach to it. Inflation riders are pretty cool because what it says is, hey, listen, as your income, as time goes on, we're expecting your income to go up. So we're going to increase the benefit as well too. That by default might also increase your premium payments. What you are trying to sell the client is a level plan, level premium payment, not an adjustable payment that goes up as they get older. Because you're going to see insurance companies try to sell both of those. Just like term life, you can do a 20-year term level price, a 30-year term level price. You can do an annual renewable plan that increases every year as you get older. They have the same thing with DI policies. And to close it off, let me tell you the professions that are much higher likely to buy disability insurance from you. These people are, 90% of them all want it. It's got to be a specialty. Dentists, surgeons, podiatrists, physical therapists, massage therapists, construction workers. Why? Because they have to use their physical body to perform their occupation, and it's a specialty. So they want to make sure if anything happens, guys, if a surgeon, I don't care how good they are, if they get a tremor on their hand, they're done. They're done. It's the biggest thing they want is disability insurance coverage. They're done. My profession is a little bit different. Right? Like I say it all the time. I go, I could be a floating bobblehead. If I can talk, I can make money. I don't need hands. I'll get somebody else to type. I don't need feet. I'll get somebody else to drive me. If I can talk, I'll make money. But if I'm a surgeon and I get this can't be replaced by anybody. This takes me out of the game. Construction workers, same thing. I do physical labor jobs. Now, granted, physical labor jobs are also harder to underwrite. It's not that we can't find companies for it, it's that they're harder to underwrite. But I will tell you this, firefighters, police officers, you ain't gonna get coverage on them. You ain't. I haven't been in the DI game for a little while now, but Howard brought this up and I'm glad he did because to be quite frank, I think I'm gonna get back into that game. I was really good in that world. But hopefully this will help you cross-selling. So if you have existing clients, go sit down with them, have another annual review, but have a DI conversation with them, right? And for those of you that like to show reports, how many of you guys like to show presentations? Like you want to come back to the closing table with like graphs and, look at this future projection. This is how much you need in order to retire. How many of you, this is how much for this. How many of you guys like that kind of stuff? Nobody? There's usually always one. There's always at least one. No? Okay. Let me keep clicking here, see if anybody else raises their hand. No? Ah, there it is, Edgar. Okay. So there's a company that I used to use, that I still use. I just haven't done it. I haven't shown it to you guys in a while. It's called PlanFacts. Plan Facts. They're a financial analysis software. I think it costs like $100 a month. They have simpler plans as well too, like 50 and 40 or whatever. Called Plan Facts. They have a needs analysis report. I love it. 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 It takes all of these conversations and it shows it on graphs. Mr. Klein, if you became disabled right now, this is how much income, right? And it grows with inflation and everything. This is how much income you're going to be losing because of your lack of disability insurance. It's 1.4 million, whatever. Right? But if you did purchase disability insurance, look how much of it we're protecting. Here's 85% of your income covered. It's a different graph. It shows now the green versus the red. It's good visual. I show those types of presentations, guys, to the wealth of America, 100%. You gotta value your time as well too. But they're good. They're good pieces to show. If you're thinking about having something like that, you might want to create a template. Like here's your average Joe scenario, right? 50K of income, 40-year-old, just do an average scenario and use that if you need to. But anyways, guys, I'm gonna let you guys get going. I know it was a little bit of a different training, but hopefully it gave you guys some nuggets, some ideas. I will tell you this, guys, it does not matter. Excuse me, hang on. I'm sorry. It does not matter how much you learn about products. It doesn't matter how many reports you learn how to do. It doesn't matter how many trainings you guys go out to do. The most important thing you need to do is get in front of people. Get in front of people, guys. If you're a leads person, buy more leads, work those leads. Stop buying leads and only calling them once or twice. Stop buying leads and only calling them every other week. No, call. A lot of the leads that we're getting right now from leads, I'm talking to the agents, I'm asking them, how many times you call them? 12 times, 13 times, 14 times before the person finally picked up and scheduled. And they're not waiting a long period of time to make those 12, 13. If you're gonna work leads, commit. If you're not gonna be working leads, you're gonna be working the market, then work the market. Stop being afraid to talk to people. Stop being afraid to get in front of new people. You should be getting online and finding as many networking events to go to. You should have a calendar that's filled two-a-days. Every day at lunch, I'm going to this event. Every day at dinner, I'm going to this event. And I got a B&I group I'm going to this Sunday morning, this Tuesday morning. Like, do it. Do it. Get out there. Shake hands. You're not making any money just by sitting around. And if you're going to be a digital person, social media, then make sure on social media, when you look at your, if you're an iPhone person, right? And you know how you can look on your iPhone and you can look at what do you call it? Is it screen time? You can look at screen time and see how much time you spent on social media. Make sure that number's through the roof. Don't be the person that just goes on social media and does this. No. You need to have 30, 40 direct messages that you're doing on a daily basis to different people. You need to be friend requesting new people and removing old people. But I don't want to remove all these people. They're friends of mine. If they're not supporting your business, how friendly are they to you? Right? Like if they're not willing to sit with you and at least give you referrals, how friendly are they with you? Social media is a tool for business, or it's a distraction for the broke. Oh, I'm gonna use that. I'm gonna quote that today on social media. Social media is a tool for business or a distraction for the broke. It's true. How many hours you lose on social media? I lose hours on social media, but I'm losing them because I'm working. I'm working. Sometimes I'm even messaging some of y'all. Some of y'all, sometimes they'll get messages from me. Hey, yo, what's up, bro? I'm eager to see you get up and go. And boom, move to the next. But I'm always on social media. I mean, you guys saw me yesterday on social media blasting what I did, what Sandra and I did when I took on that shopping spree. You don't think, I did it on the private Voxer in the group chat with you guys. You don't think I did it on social media? You know how many people sent me messages on that? You know how many people liked it and hearted it? Not only on the post, but on the stories. You know what I'm doing today? Oh my God, today I'm hitting that up like crazy. Like crazy. You know what I'm doing with the women? I'm hitting them up like, hey, has anybody ever been able to do something like that for you? No, they haven't. Would you like to be able to do that for yourself? Yes, we should talk. You know, I'm hitting up the men. Yo, have you ever done that for your girl? No. Would you like to be able to do something like that for your girl? Would you like to change from, having to buy what you need versus having to buy what you want? That's a different conversation when you can buy what you want versus what you need. It's a different conversation when you can open up the menu and you don't got to look at it from the, from the right to the left first. You got to look at the price first, right? Oh, don't look at this. Don't look at this because I can't afford this. I can't afford this. Let me look at $9.99. What's that? Soup, salad. It's a different. I mean, think. Wouldn't you love your budget to be more focused on what you want versus what you need? That's the kind of conversation I'm having with people on social media. So I use that as a tool. I leverage that as a tool. When I highlight certain wins, like Cesar Garcia making 10 stack this last week. 10 stack he made on one sale. It took 2 weeks to submit the business, approve the business, and commission him. 2 weeks, 14 days from beginning to end, he made 10 stack. You know what? I'm promoting the heck out of that. You know how many people have hit me up? Yo, did he really do that? Yes. When's the last time you did it? I haven't. Why? Oh man, I've been procrastinating. You ready to get out your own way? Let's talk. Social media. So again, whatever you are, if you're a digital person, if you're a face-to-face networker, or if you're a lead gen person, commit. Commit. Not 1 day, not 2 days. Commit. Commit. If you're going to be a life person, be a life person. I don't care what you're going to be, but commit. Because the biggest thing, your biggest hurdle is you. You're in your own stinking way. Get out your damn way. Get out your way. Stop putting the, oh, I can't, oh, but what if? Stop. Stop that negative talk. I heard this one time on a video. There was Will Smith, I think, who said it. The person that says he can and the person that says he can't are both right. You know what that means? Whatever you feed to your mind comes to fruition. So if you got to feed yourself a lie, right? I'm the greatest, I'm the worst. I'd rather feed myself a lie that I'm the greatest and get closer to that than I'm the worst. But get to work, guys. Get to work. Your community needs to know who the heck you are. Okay? CJ Noel Robertson, I know you're a part of his organization. It's funny, CJ and I talk. He and I know damn near everybody in the community. Oh, I know this guy. Oh, I know this guy. Oh, I know that guy. I know. Like 2 days ago, I was at his office. He needed jerseys for his little league, for his little pee-wee football team or whatever. And he's like, yo, do you know anybody? I'm like, let me start sending some messages. After 20 minutes, we're realizing we're text messaging the same people. And I say to myself, you know what? You know why? You know why that is? CJ is heavily successful in many businesses. Do you know why? Because he's not afraid to get out there and talk to people. Coincidentally enough, he and I know a lot of the same exact people. And I've known CJ for years. I've known CJ for like at least 12 years. Easily. That's the difference. So you want to find patterns between people that are successful in business? See how many people they know in their network. It isn't that people walk through their doors and no, we went out there and talk to people. So if you're going to be a leads person, talk to a lot of leads. If you're going to be a social networking person, then get on digital space and talk to a lot of people. If you're not going to be that person and you're going to be a handshaking person, then you better be the king or the queen of networking events. The king or queen of, wine toasting events, the king or queen of B&I events. You better be that person. I'm looking down that list right now of people that are here, and a good majority of you guys was through social media. A good majority of y'all came through from social media. A good majority of you guys came through that route. Free. 10, 20 platforms y'all can get in on. TikTok, Snap, Instagram, Facebook. And if this is like a kryptonite to you, if you're that person, you're like, man, I'm not good with technology. Get in your car and go to networking events. It ain't hard to get on Google and type up networking events in Dade County, networking events in Cook County, networking events in Lee County. It ain't hard. Get in your car and go. And if you're neither of those, then dig into your wallet and buy leads. And don't just buy one time. Don't just go to one networking event and don't just send one social media message. I do that more than I do anything else. I send 1,000 messages for every 100 clients that I obtain. 1,000 messages, 100 clients. You're 50 mistakes away from 6 figures. Take that to heart. You're 50 mistakes away from 6 figures. How fast is it going to take for you to get through those 50? Because 51, number 51, 6 figures. But you got to get through 50 mistakes first, 50 letdowns first. Have a good one, guys. Be blessed. Let me hear your feedback on the Voxer. Let me hear what you learned about disability insurance. And let me see who's going to implement it. Let me see who's going to do something about it. Let's get ourselves on the leaders board. If nobody has any other questions, I'm going to let you guys get going and enjoy the rest of your day. Everybody's good? Good, good, good. Will T. Hansen. I don't know what Will stood for. Let me read the rest of the messages here real quick. Great training. Thanks. That's dope. Cool. All right, guys. Have a good one. I'll be on for another minute if anybody has any questions. If not, you can go ahead and get off. No problem.